All right, so carrying on here in part two, and sticking with this theme of trying to come up with the right combinations, or if I say it differently, if I were in your shoes, if I was trying to put together the right combinations, and be sensitive to the cost involved as you add more and more indicators. Well, I'll just walk you through some of the things that I think would be part of the decision process as to how useful they would be to you. And so in that spirit of based on my own experience, indicators that I will always have on my chart, and because I don't think there's any way that they can't benefit you. And so next in that sequence, if I'm just putting together a template here after the initial balance and the auto fibs toolbar, of course. Next thing I would be adding would be the volume profile. Now, our volume profile has some nice features in it here. Let's see if I scrunch this up here. And I should note here, we'll stay with our 2000. We'll stay with the tick chart theme here, and then the next videos, this will probably be 3 or 4 videos. We'll go over to time based here for those combinations, as you'll end up with a different set of tools because of the inherent pros and cons of each, whether it be time or tick. So sticking with the 2000 tick chart was very common for the ES. It was very popular tick size to trade. Well, if we look here at a volume profile, of course. Again, I mean, it's a. Is it essential? I don't know that I would call it essential. Does it add value? No question about it. And then it's a function of how you're going to use it. Right? So obviously, let's get my little line tool here. Obviously, if you look here, you can understand why we have this high volume node here as we stalled here before the last drop, and then we've got another one here as we stalled. Now this is of course the end of the day, right? So it's not as relevant, but just to show the example of where that could be useful, I sure would want to know that here. Now you could make the case, right? And sometimes we do this, we kind of talk ourselves. Well, I would have known that this would be a high volume node because of the amount of time we stayed there. Maybe, right? That's kind of up to the individual as to how important it is to you to want to see those. But I suppose I'd say it this way: if costs were no issue, I think most of us would find value in having the volume profile on the side of your chart here. Now we do a couple of things here. That we have some right tool options here. So typically I would extend yesterday's volume profile lines. So I would want to see the POC, the high, low, and the value area here. So you can see. So here's yesterday's low. The market gets a little reaction to it as it revisits that low, and you see it actually gets a bounce off of it. A little gravitation then before it falls off here, and then the value area is high. And here we've got our value area high was actual high of the day. What an extreme day that was. So these would be additional features that I want to have here. Now I'm going to take that off here just to, don't extend yesterday's, just to not clutter the chart up here. But again, there's certainly value here, but it's just, again, kind of the benefit of this lease program here. Put it on your chart if you wanted to try it, and be sure you're getting value from it. If you're not, well, take it off. Now, the other way you could get volume profile without having the volume profile indicator, and this is a reasonable approach to it. If you wanted to save the cost here, there would be additional benefit to you in having the toolbar, because I could just draw them. And in fact, often I will do this. So we have a volume profile tool within the toolbar. So for example, this would be a nice case of it here. So I might want to just draw the volume profile of that swing. Right, so I want to see that, and it'll come up here in a second. So I might want to see that and say, okay, well, here's the POC, right? If you can kind of look at it and make sense here. You have another little high volume up here. You might look at it this way and say, okay, well, here's the value area high. So as we came and tapped the edge of that, would that have been something that might have been of interest if you're determining whether or not that would be a sell? Well, probably not enough by itself. But as we work through this little video series here, we'll look at some other things that might have been there to help guide that trading decision. Now note here, you're also right next to the IB after we've just had the initial battle to try and get back into the IB, and now here's the failure. But I mean, just carrying that on, right? So the same kind of thing here. I might do the same thing right here and say, okay, well, here's the POC, and here we're coming up to the edge of value. Kind of the same idea, right? Same idea here. Well, looks like, whoops. Try that again. We're just grabbing this little rectangle tool. Again, this is easy in hindsight, right? So, but you might look here and say, okay, the edge of the value here, we're just on the POC. Looks like they're running stops there. Now, would that be enough? Oh, edge of the value, is that going to be enough to make that trade? Well, maybe not. But would that, if I if I were add the measured moves on here now, is that helping? Right, is that going to make it any easier? Now here, I don't have anything here other than we've just hit a target, but as I retrace and come here, I'm between a 50 and a golden zone. Here at that edge, enough? Well, let's keep building on this, because what we're trying to do is get to where we can get as much confluence at that moment in time based on momentum, geometry, volume profile, algorithms that we know are in the market to help us pull the trigger there. Right, so let me take those off here just to demonstrate that there's a couple of different ways you can do it. So if you didn't want to go this direction and you wanted to take advantage of some of the tools that are specific to our technical approach that are built into the toolbar, well, that's a nice way you could do it. So let me take these off as again. Right, so now just kind of building on the process here. What else would I want to have on here? Well, I'd want some sort of a moving average baseline, which is here I guess probably easier just to show it to you. So here, this is our McGinley River, which is just it's a fancy way of saying, so I've got a moving average in the middle and then the highs and lows on either side of it, right? So it's a common approach in terms of looking for a range rather than just a line or a specific price for a moving average. We get kind of a range, and this is a 55 period McGinley, which I use. I don't know what happened there. Which I use. So this is a 55 period. And you'll find this has long been used. FX traders and day traders have long used it. It tends to be the 50 or the 55. Tends to be kind of a home base when the market. Well, here's a great example. You see. Let's see if I go back here. It tends to be where you'll see the market consolidate, right? Or there'll be a pause consolidation as the market moves away from it. So the 50, or in this case a 55, is very useful to have kind of as a reference. Here you see it again. Now yesterday we had that massive day. You see the distance we get from it, but eventually we come back to it. Here's the little really, if you didn't catch this, very little opportunity to get into it. It was really only the sell-offs at the end of the day gave you any trading opportunity, because if you didn't catch this, you were sitting on your hands most of the day. I know I was, right? There was very little opportunity to get in. The only thing that saved my day was there was a nice sell at the end of the day. But again, you see it here. So this tends to be kind of a nice baseline here. Now there's a couple of different ways you could do it. So you could try the McGinley River, which nothing says it has to be at 50 or 55. I'm just telling you that's a good reference to use. You could put it on whatever you want. A lot of people like a 34 or a 50. It's whatever your preference is. Kind of the point here of both the trial as well as the lease option, right? Now the trial, maybe sometimes 5 days isn't enough, and you're thinking, well, I think I like it. Okay, this looks good, but let's trade with it for a couple of weeks before I make that decision as to whether or not I want to make this part of my trading template. So that's one way to do it with our McGinley River. Again, set it to whatever length that you prefer. I like the 55. Now the other way to get there, if you thought this was, well, I don't need to do that, because of course you could do this just with an EMA, right? You could just create an EMA and you could do it within Ninja, right? This is a luxury item, but having some sort of a 50 or a 55 probably a good idea. I think if you put it on your chart and you're not using it already, I think you will find that it will add value. So McGinley River or some sort of an MA cloud type of thing, right? I would call that. You'd want to have it on your chart, but you wouldn't necessarily need ours, right? You could just use EMAs. Well, the other way you could do it based on our tool suite is you could just use our devil bands. So these are ATR based bands. So in this particular case, so I've got a 55 again. Oh, here, let me take this off here. So I've got, again, the center line is a 55, and then this is one ATR on either side of it, right? Same kind of idea. And you'll see here often this is where we get consolidation. Same thing, right? It's going to look very similar to what we just looked at, right? So here's that same consolidation before the drop off. Here we're moving so far away from it. But again, it's a nice reference. Now some people would look at that and say, God, it's too much stuff on my chart, right? It's kind of in my way. Well, that's a trade-off, right? So it's a little bit less in your face here with something like this, and you can fade that and make the opacity whatever you like. You can do the same over here, but again, the idea is when I'm in here and I'm inside one ATR, right, I know we're not going to stay there, right? So what might I use to help determine which direction we're going? Well, of course, that's our goal. We're going to get there eventually. Oh, so that's one way to do it. Now, one of the advantages of the ATR bands is that in addition to kind of a pseudo moving average combination like our McGinley River, you can run it at multiples of the ATR, so you get something quite different. So, for example, if I took that, here, let me get these off here just for the time being. Let's take that off. So I could do the same thing over here. So now I've just added I've added the devil bands twice. So I've got a 3 times the ATR and a 4 times the ATR. So I get kind of this range on the outside. And on the center, I still have the McGinley River on, but there's a center line here that's set at a 55. So my point, I'm trying to show you here that you wouldn't necessarily need the McGinley River in addition to the devil bands, because you'd have that center line there as well. You wouldn't have the little zone, right, created from the highs and lows. It'll just be a single line, but you get the zone on the outside. I mean, you actually could put the zone on the outside and the center, put the 1 ATR in the center, but I just think that will be too many lines. So this can be a manageable way to approach it, where you're getting that reference of, hey, if I'm pushing 4 times the average true range over the last 55 bars, is that maybe we're a little bit overdone here and a pushback? So if it's going to snap back, often it'll go right to the center line, and if it can get through, then it's to the other side. Here's center line, right? We're in the middle of a raging downtrend. Center line. The prior day, well, here's the last little consolidation, right? We're not going to stay there, one side or the other. Again, you see it here. So that's just giving you options, but I'm trying to show you here things that that might not have occurred to you. Well, hey, do I need that McGinley River? Do I need something like that in the center, or do I want something on the outside? Just options, right? I'm trying to show you there's a lot of flexibility with regards to how you approach this. So these would be ways that you could kind of do some experimentation and say, okay, well, does this work for me, or do I need to have less stuff, or is this the right amount of stuff, or is that too much, and do I like something a little more subtle in the middle of my chart, right, to kind of guide me in terms of where I might likely see a little revisit here before the trend decides, are we changing, or are we carrying on? Kind of a nice way to do it. So that's something as well. But now let me keep moving here so I don't run for 3 hours. Okay, so we've got, so now on the chart we have the IB, we have the toolbar, we have volume profile, in this case we have a McGinley River, and then, oh, whoops, it keeps doing that. And the next place that I would go in terms of prioritizing what I want to see on the market, on the chart, that would give me some insight into what the market's doing. Well, the longer I've traded, the more I've just become obsessed with trying to read volume. And just if you will, even harking back to the age-old maxim in trading that volume precedes price. So when we're at a situation like this pivot right here, right, I want to see what the volume is, what's happening in the volume, whether that's, I'm trying to get you here, whether that's intra-bar, whether I'm looking at delta, what I want to see how aggressive buyers and sellers are. I might be looking at a footprint chart if you're, if you have understanding how to read a footprint chart. But somehow, some way, I want to see what's happening in the volume to help assist me in whether or not that's the place that I want to be shorting. Do I want to be shorting here? Do I want to be buying here? I mean, look what we just did, right? We're bouncing out on the other side of the McGinley, right? So we're on the other side of the 55. Oh, is that potentially now? So look what we've just done here. We've tagged yesterday's low. We're getting a little reaction. You see the market responding to it, right? Algos will respond to anything they can. So yesterday's low, likely, right? There's be a little algorithmic response there. So pop up we go. Now we're there. Now remember, that's a 50, right? Here's the swing, right? Retrace to the 50. Now, do I want to buy? Do I want to sell? Wait, I'm on the other side of the McGinley of the 55. Do I want to be a buyer? Oh, but I'm at a 50. Do I want to be a seller? But I'm on the other side of the McGinley, right? And it's green. Well, okay. Well, how about over here? I'm at a low volume node, right? If I just grab that, can I do that? Can you let me do that? If I grab that and draw it over, low volume node, right? So the market in a low volume node market will typically it will either push right through it because the market didn't spend any time there. We didn't have any any business done here enough to register here so you get a low volume node. Is that enough, right? Is that enough to make the trade there? Well, you kind of got mixed signals here. You're at a point where the trend, I think we can see the trend is clearly down, and we've had an internal retracement. Now, your assumption is at this moment in time, well, I've had a swing, I've had a retracement. Why would I not assume that it's going to carry on here? Right? I mean, but just as easily I could say, well, if we retrace here, couldn't we have just an internal that goes external here, and we'd still be internal there, right? Maybe we're going to go up to this golden zone, right? So these are all of the decisions we wrestle with as traders that we've got to deal with here. But where I was trying to go here is, what about the volume, right? Are buyers coming in here with muscle? Are they we're going to push back into the IB, or is this just a little retracement and we're going to carry on? Well, I kind of went through all of that to show you here in the context this particular case, since we're over here on the tick side. If we just add regular volume, so this is our devil's volume indicator, right? So if we add volume, a volume indicator, whether it was the up down indicator in Ninja, it would probably look almost exactly like this. Here we're making some distinction here, so I have churn bar, well, high volume, narrow range. So I have a churn bar here noted, but I have no high or low volume bars because it's a tick chart, right? So because each bar is 2,000 ticks, the volume doesn't skew dramatically from one bar to the next because we have an equal number of ticks, right? Obviously self-explanatory, but we don't get the same benefit in a tick chart with traditional volume that we would with a time-based chart, where we can see the discrepancy between the amount of volume at 1 minute or 5 minutes relative to others, right? So a traditional volume indicator in a tick chart really adds no value. So that's kind of a segue into, well, how am I gonna get, if volume is so important and volume precedes price, how am I going to get some insight into what's happening at that bar? Well, of course, again, as I say, you could go to a footprint chart, you could look at your DOM. I mean, there's a couple of different things you could do there, but if you wanted to stay with traditional technical analysis, candlestick type of charting, there's a better tool to use for that, and that would be our Wada-Attar explosions. So here's that section with the Wada-Attar, and I've just changed the colors here. It's just a different chart here, and I have it set that way because the Wada-Attar has a couple of color codings that I want to stand out, and not to belabor go into a detailed analysis of how to use the Wada-Attar. There's a dedicated video on that on the site. So for you tick chart traders that are looking for insight into volume patterns, or where it shows up, this is a nice solution, to at least give you some insight. Again, of course, you could always look at a footprint chart or your DOM or whatever it is that you're currently doing to determine when you see strength amongst, or who's in control, buyers or sellers. So what you do notice here, and there's a couple of good examples here of some of the challenges that we'd be wrestling with here. Well, okay, just looking at the center line here, I mean, here's the IB. Now we've broken back, so we've been focused on this one pivot here. But there's a couple of things to note here. So clearly the trend has been down. Now we've made this little retrace here. We've come right to a 50, right, which we would have known because the auto fibs would have highlighted it here. So if we're over here, there would have been a 50 and a stack of golden zones right here. So we know that's there. But just as well, there's going to be, remember, there's going to be an algo on both sides here. So let me bring this over here and show you an example of what would have been a failed measure move. So this would have been right here if I take it to this pivot, and I go right here to the 50. Now you look at that and you say, oh my God, it's just absolutely perfect, right? We've retraced right to the 50, right to the McGinley River or the 55 EMA, whatever you're using. We've retraced right there. I've got a swing. I've got a retrace. I'm at the golden zone. Right? That's definitely. Now, did you make money there? Well, let's assume you didn't get the tick high. Let's say you took the break of that bar here. So from that to the pivot there, well, there's 35 ticks, right? Just getting to the ATR band, that's 35 ticks. Now, would you have known to sell it there? Well, if you're scalping and you're working multiple contracts, perhaps you got one out and the other one's at break even. So that may have been a profitable endeavor right there. But if your stop was at break even, you're taking the stop there. Or if you you're at scratch. You're taking the scratch right there, but perhaps you got your scalps got out there, right? So, but note here, it fails. So if we look below, let's get this back here. When we're right here, and this is very typical. You see this. So there's the burst of volume here. Literally, that's why we call it the explosion, or well, it was named the explosion. I get an explosion of volume here. Here's the peak of the buying volume right here, right at the pivot, as we hit the in this case the McGinley River, and as we hit the golden zone. Now, do you want that trade? Well, next bar, boy, I got a big fall off in volume. Now, would you have known to take it there? You know, this is tricky here. We're going to look at some other tools to help you with the conviction there. But we get 1, 2, 3, 4 bars in a row. As I said, that's 35 ticks down. And you see here, you can see the sellers are coming in here via the red bars. I don't have trend, right? The explosion line is black. Then we go into neutral. There's no advantage here. You don't know where you are. You're just going sideways there. And so we get that, we go under the threshold here, and then the market turns around and we get an explosion up here. So here comes all the buy volume. Now, all of that is needed to drive it all the way up here. So we've gone from 3 times the ATR on this side to 3 times the ATR on this side. And as we get there, on the first push here, note we get a big explosion of volume right up here, right to that pivot. There's a little, you can see the fallback. Now the next push, look at the divergence in volume. Right, as we go from here to here, right? Now look, as we do the opposite, if I can draw this up, we do the opposite here. Right, so starting to build a case. So I'm at 3 times the ATR. I'm at a 50. I've had a big drop off in volume, so the trend has been down all day. Is that enough? Well, if you're not short at the pivot, which let's assume you're not, right? Let's not assume perfect trading. So as we start to back off of that, so a common entry would be to take the low of that bar, break of that low. So the next bar you're in right here. Well, look down below. I've got a little, I can see the peak of the red coming up, but I don't have the explosion line kicking yet. Now it starts to kick here, and all of the sell volume, you can see all the sell volume comes in until we get here. What's the next thing that happens? Well, now you see the buyers come in here. They're trying to drive it. Where do they drive it? Right back to the 50. Right, and on it goes, right? And that just carries on. Here's the next time we get. Now there's another golden zone right here. Same thing, almost identical pattern. Here's the push of the buyers. They can't sustain it. They push again, but they're not as strong, right? Look at the divergence. We hit a golden zone. We hit the 50. I bet that's another $500 there, right? So if we from this, let's assume break of the low down here. There's 43 ticks, $525, right? As the sellers take over, right? So very effective. And so if you're in that context of trying to find insight into volume and you're looking for better tools or new tools or a tool to give you insight into volume in that bar, and you're not using a footprint chart, or not comfortable trying to read your DOM, well, would be a nice solution for that. So at least you're going to get some insight into where the volume is ebbing and flowing when volatility is expanding and contracting, and you're just getting a representation of buy and sell volume. So that's a nice way to do it there. Let me take that off here. Okay, so moving forward here, where did I leave off here? Let's go back here. That was volume. Well, let's use this one here. So I'm going to pull this down since that was there just to make the point that volume in a tick chart here, traditional volume underneath the chart, is not going to be particularly useful to you. So here we'll just stay with this same day and this same pivot here, which I think is just a good test case. So now if we're looking at here, so again in the context of, okay, what have I got on the chart? So I've got my median line here. If I'm trading with tick charts here, well, I'm going to have my Watt Atar. So I've got these are the priority items. I need some insight into volume. I'm looking for some kind of a baseline moving average here that I know the market is likely to gravitate towards. I've got volume profile. I got my auto fibs. In this case, I've got measured move on, just to demonstrate what you can't see because we're at the end of the day, what you can't see in real time. The measured move will show you where the auto fibs would have been. Right, and it's just showing you those that completed. Well, the next thing that I would put on here, just in the list of things, if I again trying to put myself in your shoes of what I would want to see, well, probably the most popular indicator we've released in some time is the market structure indicator, which we just released 2 weeks ago. Let me clear all of this up. And I'm going to go ahead and put, because there's almost no way this can't help you. So let me go ahead and put this on here. So this is, if you're not familiar with market structure, or as it's often amongst traders called the smart money concepts approach to price action. It's a price action based approach to trading with very specific criteria for determining uptrend or downtrend. So if you're not familiar with that, of course, I would encourage you to get to the website, and there's a couple of, well, you could do it either on the website or on our on this Ninja playlist. There are a couple of very specific videos dedicated to the theory behind market structure. And let's see, do I have it? Oh God, I do. Bear with me a second here. It's on the website here. All right, so here under our market structure, smart money indicator here. If you're not familiar with all this, what this means and what the boss is and the change of character, if you've not seen that material before, well, demoing or leasing that indicator would be of absolute zero value to you until you've been through these videos here kind of explaining it. Now, there's lots of places you can get insight into SMC trading or market structure trading or price action trading. I'm not the only one teaching it, but if you're looking, we are the only, well, that I know of, we are the only vendor that provides a market structure tool suite here for SMC trading on Ninja. It's very popular amongst FX traders, but for futures traders, I don't know anyone else who has taken it this far. So that would be something I would encourage you to invest the time and understand before it would have any value to you with regards to a lease or even a trial. You got to understand how to use it. But again, staying with the same theme here of what would I consider essential? Well, I now would consider this essential here, and again, still on a 2000. It wouldn't matter if it was tick chart or time chart, right? Same idea. And then I'm going to add the supply and demand zones here, which we have a little hotkey on and off because they can be too much. Now, what you're seeing here, this in this case, because of this massive downtrend, all of the supply zones left behind as the market was falling. And this, if you're a price action trader and you're working with supply and demand zones like this, based on what's happening with the internal and larger swing structure, where we've got breaks of structure and changes of character. Well, on a day like this, where you have this massive downtrend, the premise in this theory and this approach to technical analysis is that we're going to have a swing and we're going to have a deep retrace to come back and fill any orders. Well, there's more to it than that. But the couple of good examples here. After the swing here and a retrace, and the next swing and retrace, the retraces aren't going far enough to get you into in this case, what would be a supply zone. They're too shallow. So if you were sitting here waiting for, in this context, it would be a swing and then a retrace all the way back to that supply zone to carry on. Well, you were waiting all day until you got right here. This is the only time that you got a visit back to a zone that you could have entered in and had that could have made your whole day, right? It could have made your whole week right there. I mean, that's a big trade. So here's again, I don't want to try and do this here in short form here. You've got to watch those videos here so you understand what happened here and how this is the change of character and then a break of structure that leaves behind this supply zone. So as the market comes all the way back to it, well, note where you are here. All right, so you're at a high volume node. Oh, let's see if I got any fibs there. So you're in between a 50. Here's the 50, that's a large 50 and a golden zone. So you're in between those two. Let me take those off just so it. So you're in between. So you've also got likely a measured move there. All right. So here's the process of putting together the confluence. I guess you're not gonna. Here we'll go right there. Okay. So swing, retrace. Now here we are here's the McGinley River at the 55. We're in the pocket. I'm at a golden zone. Down we go. Now, let's say you didn't get that one. Well, you had another chance of it here. It doesn't get to the target being the last low. Here we retrace, we get back into it. Well, here's the measured move target. There's first target, second target. It goes all the way. Right? So here's the trade of the day, as far as I'm concerned. So you could take that trade, your stop on the other side of it. Let's assume you're not going to get the tick high. That's, what did you get there? Well, just about 12 to 1. But not quite 12 to 1. So off of this, which you might have been waiting all day for that trade. Right, so but look at the confluence. McGinley River, supply zone, measured move, high volume. Right, that's before we get into any oh God, what have I got? Well, I've got that That volume, it's no benefit to you. But if you had the Wada Atar, right, that might be additional insight, right? Who's in control as we push out of here? Do I get an explosion? I imagine you would. So all the way down, so I get a 12 to 1 here, right? What did I risk? 11 ticks, right? And that's assuming you're not getting the tick high. That's assuming the market's coming down. Your stops on the other side of the supply zone, or the other side of the 65. In this case, massive confluence. 1,600 a contract. Now, are you going to stay through all of that? Maybe not. But if you're at the very least, let's get that off of that. First target would have been the prior low. Now it's an algo, so I have a second target here, which would have been the algo target. So just in the SMC context, for the initial target would have been the prior low, right? Because that would be the weak low in this case. I've got an algo target. I've obviously got some support and resistance here, and it keeps going. So, if it's me, I would have taken a partial here for sure, right? For no other reason that was the low of the day at that time, right? And that we never want to assume it's going to carry on, right? In fact, you get a little kickback here, as is often the case at lows of the day. That's, you guys have heard me say this 1,000 times. That's never a good place to enter the market. So, and you can see that's a bigger kickback than you realize, right? That's probably, there's 18 tick kickback, right? So if you were short and you didn't, there's 16 ticks, or just round it, right? So that's a $200 kickback just from trying to sell the low. All right, so that they stop you, and it keeps going. Little consolidation, it keeps going. So this would have been first target, second maybe, right? I'm sure I would not have ridden past that. I first target here. If I'm pushing it, I might have taken second target there. But that's just trading, right? You don't know what's coming next, especially because I can see that was something. The prior day, a prior low. That's a prior low pulling all the way over. So both of these lows here would be important. So as we got there, I would have not pushed my luck, right? There's a nice trade. So I'm not going to get all $1,600 out of that, but in a 2 lot, I'd have been pretty happy just to get that, right? Well, that's a nice trade right there. There's 40 ticks. There's 500 to the first low, right? And then you end up with 61,775 here to the algo target off of that measured move, right? Second target. Now you don't know what's going there, right? So that would have been a nice trade. And while you look, say, if I just stayed, right? That's not how you want to think of it, right? It's sure, yeah, sure. If I sold the high and bought the low, right, I had a great day. Let's be realistic about it, right? So that would have been first target, very reasonable second target. If you or having a big day, maybe you let one run, but that's a little bit of hindsight trading. Notice what happens here, right? We do get a flip at the end of the day, right? It's not, if you're not familiar with the SMC lingo, right? So we get a break of structure here, a retrace here, we get another break, and now it's coming back here. Now note, what do we have right here? Another measured move, first target, second target. Right, so there's a flip. So, but again, here I'm getting long-winded again. How am I doing? So I was doing that. Just more confluence points is what I'm trying to get you to. What else can I put in here to help me make that decision? Because that's the trade we want. How do I can see it after the fact and go, this is right into a golden zone. How perfect. Right into a supply zone. How perfect. But can you pull the trigger right there? All right, that's the tricky part. So I'm going to wrap it up here because those would be essentials before we get into indicators that would be underneath, either momentum or oscillators or volume based. Now we've touched on the Wada Atar, but let's put a complete package together here. We'll stay with the tick chart, and then I'll finish with a couple on combining the market structure with the graphical order flow, which is probably the most recent indicator tools that we've released, and they lend themselves very nicely to combined usage when we're over on a time-based chart. So I'm going to wrap here. We'll come back. We'll look at indicators, and then we'll look at it in both. We'll finish with a tick chart here, and then we'll go over to some time-based here. So with that, stand by. I'm going to wrap here, and then we'll finish with parts 3 and 4, I think, in the next couple of videos. Okay, back in a second.